Welcome to the Finance Podcast. The topic of this episode, Marketplace Lending Online Debt as a Novel Asset Class, with the speakers Matteo Bernardoni, Florian Kübler, Andrea Canonica and Stefan Pomberger, moderated by Nadine Berchtold.
A warm welcome, and I'm very happy to see so many people interested in the topic marketplace lending. Today we are going to discuss if online debt is a novel asset class that is worth investing in. And I'm very happy to briefly cover the topic, provide you some figures about the market, but then I'm going to have an interesting discussion with people that know the market even better, that are part of the market, and you guys can also ask some questions at the very end. Who am I? I am Nadine Berchtold. I am the General Secretary of the Swiss Marketplace Lending Association, and I'm also a research associate at the Hochschule Luzern. There we conduct research in this field, in the marketplace lending field, and also other interesting studies. What even is marketplace lending? Thank you. Marketplace lending is basically the lending concept that you know that usually provide banks is put on a marketplace. So this is where lenders and borrowers, they meet. And then this obviously happens online. This is why it's online debt. So this means there is the borrower, there is the lender, and there is the platform. There are the conventional parts that you all know. There is a loan agreement, there is also interest, there is the fee, the interest. But what is different is the platform fee as well. This depends a little bit on what exactly is the business model of the individual platforms. What kind of loans? This really depends on the business model. So there are different kind of loans. There are SME loans. There are loans to public entities. There are mortgage-backed loans as well, private loans as well. Basically, we try to define the different business models by the lender side as well as by the borrower side. On the lender side, we have banks, professional or institutional investors, but also private lenders. On the borrower side, we have private SMEs, corporate or public corporations, as well as banks. And this is how we try to define the different business models. On top, you see 5 different segments. These segments, they're only for institutional investors. We have mortgage loans, which is brokerage there. We have institutional loans or to public entities, but also to large corporations and even banks. They might meet on a marketplace as well. The lower 3 is the segment you might know as crowd lending. Also there we have different segments. We have mortgage-backed loans that are on a marketplace there. We have loans for private people as well as SME loans. This is how we try to define the different business models. So you find all the different kind of loans and all the different kind of matches from institutional or private lenders as well as borrowers. What has the market done there? So I'm starting with the mortgage brokerage platform. There, it's still a niche, so the market share is around 3.5%. So it's still a niche. However, we have reached already quite a significant number. We are standing at 6.2 billions that were brokered on the platforms. There are different platforms on the market in 2022. And I'm struggling because I only have 2 hands, but 3 things I need to manage. The next one is loans to public entities. So these might be Kantone, Gemeinden, for example, where also can go on a platform and there they can get loans. And you see there also the growth is quite significant, starting in 2017 from 2 billion reaching to 14.7 billion in 2022. And maybe you already know the new figures from 2023. We're going to publish them in October. There is another one. We don't have the graph there, but also a significant market segments, so money market transaction. Obviously, how the name tells, they're very short durations, so usually the loans, they are less than 1 year, so this drives up the volume a bit, but there in 2022, we already stand at $280 billion US. Last but not least, we have the crowd lending segment, so the 3 bubbles we saw previously. This is a combination of mortgage, business, so mainly SMEs, as well as private loans, and all combined. In 2022, we reached the volume of 467.5 million altogether. Obviously, you can imagine these different loan categories, they have different average volumes per each loan. So mortgages usually, not surprisingly, have bigger, larger average volumes compared to private loans. Also very interesting, there we also have some figures about the risk and return. And this is something, a very typical view that we see. So it's kind of a U-curve. You start at the higher return expectation, obviously, once you don't have any defaults yet. Then, because our measure is quite strict, so everything that has defaulted, or everything that every borrower that has not paid after 90 days is as a default in this calculation. So once they take on the payments again, then we see them in the statistics again. This is why it's not only going down, it's also going up again once they reassume repayment. And there you see, depending on the vintage years, we have all the vintage years from 2016 until 2022. You can expect different returns there as well. On average, by the end of 2022, it was able to make a profit of 4.4%. If you want to know more about the market, I was going through it very quickly because I want to have enough time to ask questions to the participants here. You can download the report. It was published in October, and we're going to publish the next one in October 2024 again. I still see some phones. Great. Okay, because I don't want to take up too much time talking myself, and I want to know more about the people that I have with me here. So I'm starting here. This is, well, the order now is a bit mixed, but you see the faces. You should be able to decipher who is who. So I'm starting here. Stefan, he's the head of cosmofunding by Vontobel. Their business model is mainly in the public entity financing, but also large corporations, mid-biz large corporations is what you finance.
Thank you, Nadine, for having me.
The next one, Florian Kübler, he is from the crowd lending segment. He's the co-founder and CEO of Lend and Splendid. Right behind him, there is Matteo Bernardoni.
Hello.
He is the founder of UBS Key for Mortgages, and he's also leading the platform focusing on mortgage brokerage. And right next to him, there is Andrea Canonica. He's from CredEx, and he's the CXO. I actually needed to look it up, what CXO means. And they also trade, or they brokerage mortgages.
Hello.
Very welcome. Thank you. All right. So this was very brief, but I think I give you guys very quickly the chance to describe the business model by yourself. Stefan, what does cosmofunding do?
Yeah, thank you very much, Nadine, for having me, and welcome to all. We are basically connecting issuers and investors over our platform by securitizing every transaction. So it is a book entry. You can book it as a bond in your portfolio, in your custody, and basically you get the rating assessment by the external rating agency Fedafin for each transaction. And as you have said, public sector, semi-public sector, corporate sector, and we did close to 40 billion Swiss francs as of now. Yes.
Thank you, Florian.
Yes, so we've been in the crowd lending space for 8 years. And yes, I think the chart or the slide that you showed how crowd lending works, that pretty much is it, really. So basically, on one side, you have SMEs, mortgage holders, and private borrowers who ask for money. They come onto our platform. We basically assess the risk of the individual borrower, and then once we approve it for funding, it goes live on the platform. We have 100,000 clients, roughly around 12,000 lenders, and on average per year we issue around 83 million of loans. We also, I think the most interesting part is really how well is the portfolio performing. You have an overall view if you want to check on lend.ch, the statistics page. We have nothing to hide. Next month, we will have our 100th month, and we'll celebrate that.
Inviting me,
Yeah.
Matteo.
So hello everybody from my end. Also welcome to this discussion. My name is Matteo Bernardoni. I'm heading the team who is responsible for UBS Key4. UBS decided in 2017 to enter the platform market on mortgages. So we are opening up the distribution network of UBS to third-party investors, institutional investor that can grant mortgages through our network and through our servicing of the mortgages. So we take care basically from talking with the clients, getting their needs, assessing the request, and then matchmaking on the platform, and then afterwards we do the servicing throughout the lifetime of the transaction. Mortgages are normally considered a boring instrument, but you would be surprised how many events during the lifetime of a 10-year mortgage can happen. So we want to provide you with the service also during the lifetime. Thank you.
And welcome everyone also from my side. Credit exchange is an exchange for mortgages, and that means on one hand we are very similar to Key4, on the other hand also a little bit different, because we connect, of course, on one hand lenders with excess liquidity and the need of investing this excess liquidity into mortgages, but on the other hand we are also open on a distribution side, and that means we allow financial institutions maybe with a lot of clients but a limited balance sheet to sell more of their own mortgages, to issue them, to keep the client relationship, and then through our platform pass these mortgages to the other side of the market.
Thank you very much. Well, you all offer quite similar services than conventional banks do. From the borrower side, I've heard some rumors, some people saying that all the bad lenders, the bad borrowers, they end up on crowd lending platforms. Florian, can you confirm that, or is that not true?
It's very often the rumor. It's actually the opposite in Switzerland, because in Switzerland everything is regulated. So all the loan, like when we stay within the private loan space, everything up to 80,000 Swiss francs is tightly regulated by the Konsumkreditgesetz. So there's no leeway to fiddle around with budgets or with credit profiles. So we cannot cater for people who are rejected by banks. It's actually often the other way around. It's simply just a pricing argument, because we don't have to support our own balance sheet, but our balance sheet is in the pockets of our lenders. That money gets directly allocated at more favorable rates, and that's actually been the most successful play of our platform. Around 80% of our borrowers already have an outstanding loan, but they just pay ridiculously high APRs, and that's where we come in and refinance them at much better rates.
Okay, thank you very much. So no more rumors for all the people that have been listening to Florian today. What about the mortgage segment? Why does a mortgage end up on one of your platforms, either on Credit Exchange or Key4 Mortgages?
Well, as an exchange, we actually offer the possibility to split the distribution from the asset management. So, of course, a huge portion of mortgages are issued and financed by the same bank. This is the classical banking business. But with the possibility to split your distribution from your balance sheet, you can actually decide where you want to put the focus. You can start selling more than what you can actually refinance, or you can finance more compared to what you can sell. And being able to actively manage your balance sheet generate actually big benefits for a lot of financial institutions.
I think in terms of the risk profile which goes on the platform, that should hold true for all platform represented. What I do say to the investor is that normally a bank can lend up to this point. So normally UBS can provide consumer loans, exception to policy. We do also exception to policies, whereas the subset which goes on the platform is a subset of everything which a bank like UBS can do. And the investor can then select from this subset their sweet spot where they go at to grant mortgages. So I think it's really a rumor that only the bad loans are going to the platform. And for a platform created by incumbents like Vontobel, UBS, but also other player, the banks creating the platform like Vontobel, UBS, they also bid on the platform themselves. So they're also actively in the platform making part.
So basically, also saying it's not one or the other. It's going together, the two business models as well.
Yeah. Mm-hmm. I would say there's a lot complementary also for banks. That's why they're offering the product, because, for instance, for banks it's punitive to go with longer tenors, 10 years, 15 years, even 20 years, because of the balance sheet structure of a bank. It's punitive if you go long tenors, whereas for an institution like pension funds insurer, it's even beneficial from the Swiss Solvency Test regulation. So it's a nice fit and complementarity, I think.
Thank you. So, Stefan, on cosmofunding, we have semi-public borrowers, we have mid and large corporations. Why are they coming to cosmofunding?
Yeah, so basically, I mean, on one hand side is we give these institutional investors access to this wide range of opportunities that normally would land at their house bank or at other players. And similar as Matteo said, it's this argument getting it together. And maybe if I may misuse this water bottle for a second, if this is the SNB policy rate, currently at 1.5%, we know that in this business there are two spans. There is the span of the deposits on the one hand side, which is a link that you could move closer to me. Deposits on the one hand side, and the credit span on the other hand side. And I think I speak for a lot of us all. If this span is very wide, there is potential for business, because we give access to investment opportunities that couldn't be so easily accessed. I never thought that Switzerland needs a port, for example, but we financed the municipality rebuilding its port, so it was on the Bodensee, obviously. So you get access to a broad range of opportunities, be it in the space of electricity, being in the space of healthcare or transportation, and providing this access makes it interesting, similar to what Matteo said. And for the issue, it's always the same. It's about price, Yeah. The price is the thing that counts, because the issue is here. He gets the credit spread of that, and the investor is somewhere in between these lines, right? Yeah.
That's a very good lead to my next question. So having the platform there, they also charge a fee. We have seen that previously. So from the investor side, is it still interesting investing? So lender, investor, I use them as synonyms in this context. Is it still interesting to invest in the platform? Or is the fee that you're charging eating all the profit you will get?
Is this to me, Nadine?
To all of you. To all of you, starting with you.
Okay, so basically for the investors, it's free of charge, the cosmofunding platform that we offer. So the investor has a clear appetite of the risk and return. He just quotes the yield to maturity or a spread that he wants to earn. That's the investing side. And the issuer side, we win on a success base. So if a trade happens, then we get the margin from that. And we could keep production costs low due to technologization, product and technology, because what we built is a securitization engine connecting these people. And given that you have a broad span here, the broader it is, the big potential is for everyone, because it's a win from the investor side, it's a win from the issuer side, and also for us as an operator in between. So there's room for everyone, in my opinion, yeah.
Yeah, I think you explained it very well with the deposits.
I used it now.
So I think at the end, I mean, of course, we charge a fee. Our fee model is totally transparent. As a lender, you see exactly where fees being charged. Also, as a borrower, everyone gets a dashboard. So you have 12,000 dashboards where everyone can see what is the net return after fees and after defaults. And I think, yeah, with a 100-month track record where you only had 2 negative months, and that's not us saying this is our track record, because our track record is actually reviewed by 2 independent credit rating agencies. And as a former trader in fixed income trading, I can say with a good, with good spirit that there is no better investment in fixed income in Swiss francs than there is for sure at Lend. And I haven't looked at your statistics, but it probably looks very similar. Yeah.
Yeah. How does it look in the mortgage segment?
The mortgage, I think I showed yesterday a graph which was showing the development of interest rate on mortgages versus govies or comparable bonds. And there was the rumors, also if we are going to get the rumors, that mortgages are only interesting in negative interest rate environment because there the pickup is higher. If you look at the graph from 2013 I was showing yesterday, there's the spread between alternative fixed income instrument and mortgages has been constant at 1%, 80 basis point, 1% throughout the lifetime that we considered. So for a pension fund, for instance, it's 100 million investment means 1 million additional return every year for the next 10 years. And that's a lot of money for a pension fund. And that's the return side. And then I think we can discuss also the other features of mortgages. For instance, the fact that you can book a mortgage at nominal, and you do not have to have this volatility on your balance sheet of a pension funds, which has also huge potential.
Yeah. I would just add the key enabler is technology. I'm sure I can speak for everyone here. It's really thanks to technology that we can not only bring in the spread closer, but also bring in the fees almost down to zero. Of course, we are not a big company like the others here. We have the chance of having a little stand at the Finanzmesse, half of my company is here around. And not because we are all lazy and looking around, but because the technology supports the operations. So we can stay away a couple of days, or half of the company can stay away and still have a lot of transaction on the platform. This is an essential element to bring the cost down for the entire ecosystem.
Thank you. So moving away from the profit side, and you also mentioned, Andrea, that many transactions happen. Me, from the investor side, I'm also interested in the part of liquidity. So how fast can I withdraw the money that I have invested?
Yeah, actually, this is, if I can apologize.
Go ahead.
Okay.
Go ahead.
Actually, creating liquidity out of the mortgage asset class is one of our main goals. With this logic of exchange and standardization, we are creating a secondary market to allow investors to sell the mortgages to others counterparting during the lifetime of the product. So mortgages are almost always seen like a buy and hold instrument. You invest now in a mortgage and then you get the rate for the next 10 years or 5 years or 25 years, depending on the tenor selected by the client. Well, we are trying to make the asset class more liquid, introducing a secondary market to allow investors to dynamically manage their mortgage portfolios.
I absolutely agree with you. I think you mentioned standardization. That's going to be key in the development. And yesterday I've been asked why there's no residential mortgage security, backed security market in Switzerland. I couldn't answer the question. I don't know. That's maybe traditional. But I think the direction the banking sector is going to with even stricter regulation may also foster this establishment of the market, which is well established in all other advanced jurisdictions in Europe. We saw central transaction in Switzerland in beginning of the 2000s and also after that, but there's not yet an established market. And I think with your endeavor, my endeavor, we're working in that direction for mortgages.
Thank you. How does it look in the crowd lending segment, Florian?
So we do have an active secondary market, but I think it needs to be said that private debt is not a Nestle stock. So yes, you can trade in and out. We also have structures such as actively managed certificates that you can trade on a daily basis, and the liquidity there is quite solid. But yes, if everyone goes the same way, such as, if you're a Kantonsspital in Wetzikon and suddenly you publish your numbers, then also no one provides a bid price. And just because something is traded on the exchange doesn't mean it's liquid. But generally, if you have a large portfolio, you will always find a buyer if it's a diversified credit portfolio.
And how long would it take me, roughly?
So
give it an estimation.
Give you a real world example. In the AMC last year, we had around one of the smaller structures. We had a 9 million issuance, out of which a 6 million holder of the issuance wanted to exit. It took us. We got the order from him to execute the deal. Within 2 weeks, he was out.
Nice.
Very good. Okay, thank you. And cosmofunding, how do I get away from the investments there to reinvest at a later point in time?
Yeah, actually, this discussion reminds me of the German saying, hin und her macht Taschen leer. I think it's true for a lot of purposes, as you said, on the public sector side as well. I mean, often it's clever when you think about the investment to have it as a buy and hold instrument. And this is particularly true in cases where you have returns which are not that exceptionally high in general, because fixed income per se is a stable asset class. That's why it's called fixed income, generating fixed cash flows. On the other hand, of course, we have also thought about how could we work out the secondary market. And so we basically employ market makers. So first of all, we as Vontobel can provide a market for this as a market maker for institutional investors who want to have that market. And the good thing with us is that we have already a big crowd of institutional investors. And I think to give you an idea, there are so many beautiful corporates here in Switzerland sitting on cash, wanting to deploy cash, pension funds, there are asset managers, banks, insurances. So there's a lot of capital out there. And the more technology we bring in, and here I'm completely with you, the more we reduce the friction, and we can really then meet in the secondary market efficiently, finding immediately a next buyer. And also from my experience, I can say in the public market, I can confirm that we see that as well in stress situations. And I think liquidity is always then key. If I may say this, if shit hits the fan, then really it's differentiating itself from the others. I remember vividly the March 2020 situation when coronavirus came and everyone was running out, and the public bond issuance market was closed for some 2 weeks until I think Coca-Cola or someone, Exxon, opened it up again with the first issuance. We had record activity. So really already activity going on, and it was a good proof for us to show it really works. There are people out there looking for opportunities. They were waiting for the moment to deploy the cash. That's what I have observed.
Okay, thank you very much. So from the investor side, what would be the minimum amount that I would need to place on your platform? So you have different business models. You also accept private investors. Maybe we start there. So the platforms are not really comparable when it comes to this. Florian, what's the minimum amount for lend?
So you can start with a minimum investment of 500 Swiss francs. And on average, our lenders hold a portfolio of around 50,000 Swiss francs. That's the mean, which means that on average, they hold about 30 to 40 individual credit positions. So you have a super widely diversified portfolio. We deal with all the payments, so we transact 30,000 payments a month. So for you as a lender, actually, there's not much to worry about. Once you've invested, you receive, tax returns. Everything is in there. You have a totally transparent dashboard. So yeah, from 500 Swiss francs up, you're welcome.
Thank you. Now we were probably making a jump in the mortgage field for institutional. What's the minimum I have to invest when I want to join Credit Exchange?
There is no minimum at all. You just need to be aware that the average mortgage size in Switzerland is around 500,000 francs. So if you want to invest 1 million, you could end up with just 2 mortgages. It's not really a diversified portfolios. So in general, our advice is below 10 million, it's maybe better to go for an Anlagestiftung or a fund vehicle, which allows you to diversify.
Or lend.
Sure. Lend, yeah. And if you are planning to invest more, then the direct investment into mortgages really makes sense. As Matteo was saying before, you get all the advantages of booking the mortgage to the nominal value, so you have zero volatility. until maturity with a positive excess return of around 1%. It's like pure alpha.
I think it goes in the same direction, perhaps adding on the Anlagestiftung. You can invest into a diversified portfolio with Anlagestiftung in the market. Investment foundation, I think it's called in English, starting from 500,000 Swiss francs. So for 500,000 Swiss francs, you can already invest in a diversified portfolio of mortgages, which are then now deploying the mortgages on Swiss Credit Exchange, UBS Key4, and so on and so forth.
Thank you. And cosmofunding, similar or different?
Yeah, we have done everything in the area from minimum 300,000. That was our smallest ticket, up to 300 million one-shot ticket. So we had a big range that we did. I think the sweet spot is around 5 million, and it makes sense to think about it when you have a buying power of 2 million plus, I would say. And below that, I would also agree to look at money market funds for the shorter term or for longer term funds, which in turn then are our investors again on the platform.
Thank you very much. So I do have one last question, but before I pose the question, I'd like to open to the audience. There might be some questions as well. So please raise your hands if you also have some questions to one very specific person or platform here, or general about the market.
Don't let us down. Thank you.
Life is usually not full of wishes, but if you had 2 wishes, all of you, what would you wish for to grow your business or maybe the ecosystem as a whole?
No,
Could be a regulation, investor base, whatever you could think of.
I think the idea of the Swiss Marketplace Lending Association is exactly that basically all platforms speak as united voice, and that at least I can speak for Lend, is definitely the understanding from institutional investors that direct lending works and creates superior returns. We have proof that it does. We have proof through different business cycles that it's a very solid investment. For now, and I can say for our platform, our largest investors, unfortunately, are from the Netherlands and from Germany. It'd be great if Swiss investors would start to understand that this truly is such a good way to invest, and don't just leave it up to the more aggressive Dutch guys.
Thank you.
It's actually a really great question, and I think I speak for all of us. There's a lot of passion in us when building such new business models, and I would compare it a bit to the time when there was the beginning of e-banking, online banking, where people still went to normally to the desk, to the cashier's desk, and get the stamp. Now you paid it, you're good. And it took some time until the new model adapted, and now I think we all use online banking, and I haven't seen. At least I didn't enter a bank for a long time, except for going to work there. But from this perspective, and I personally believe, and I hope that this vision comes true, that it gets broader adapted, as you said, because there's a lot of potential in this area. That would be my wish.
Yeah. I think, Adrian, if you ask the wish, I think my wish would be 3%. 3% is the difference between 2 and 5%. 2% is the current investment of pension funds into mortgage, which is very low. And if we come from 2 to 5%, which would still make sense from an economic standpoint of view, so I'm talking to any consultants in the room, I think 5% is still something we can stand behind from an economic standpoint of view. I think that would be Christmas, Easter, and all other things together, because 3% in the pension fund space is 30 billion Swiss francs.
Okay, now it's getting very hard for me to find another wish. But I would say, more in terms of psychology, I would wish people not be afraid of digitalization and also not be afraid of change. What do I mean? The mortgage business is very traditional, has been working like this since hundreds of years. And at the end, what our platforms are doing are shrinking down the processing time from hours to seconds. And of course, when we try to convince banks or insurances, which have entire teams looking at classical credit analysis, getting the documents and checking and so on, and we tell them, look, we can do what you do in 4 hours in 1 second. Of course, there is always a big change resistance. But being afraid of change is not bringing anything at all. We see really in live examples, all the partners working with us at the beginning always had teams fearing to shrink. And what happened was exactly the opposite. Because the technology is enabling to automate those routine jobs, the daily business, those routine tasks, which generates in generally the lowest added value. We managed to free up a lot of time, and actually all the team grew with us. Now they are focusing on more complex transactions, mortgages that we as platform cannot automate or cover. Now they are focusing on this. They are spending more time with clients. So this, the fact that they embrace the change at the end proved to be a very good decision. So not be afraid of change, embrace digitalization. That would be my last wishes after a very long series of spot on desire.
Thank you very much. Any other questions that we could answer? We still have.
Yeah.
As a lender or investor on your platforms, do I always pick the single assets, the single loans, or are there other ways where I end up with a portfolio from the beginning?
We start from here, I guess.
Okay. So,
Okay, good.
so
basically on our side, single transactions, yes, at the moment we are set up, but there could be ways, bundling it into a fund. And our clients do it, they are an investor, so we have funds as an investor, and then they do it that way. So when investing, then they're in the fund. Yeah, so there are both options. We provide the transaction, single transactions, yeah.
So on Lend, you can do both. We do it the most cost-efficient way. So we also have funds and AMC structures that basically are already widely diversified structures. But the majority of the people that lend on Lend start manually. So they play banker. I want to give this guy $500. I want to give that mortgage $2,000. And after a while, that becomes too big, too cumbersome. So we have a robo-invest functionality. So you basically delegate your decisions to the platform. You can set exactly how much you want to give per project according to what maturity and what rating, and then basically the platform just deploys your funds automatically and returns them to you.
Same as for Lend. You can invest, as I said before, in investment foundation, diversified portfolio manager takes care of everything. You can invest in a robo mandate. Then we invest normally in smaller mortgages, and then for larger mortgages, it's deal by deal pricing and a deal by deal credit decision by the investor.
With CredEx, you can buy a portfolio out of another investor, or you can finance transaction after transaction. At the end, it depends a little bit on the time value. We have partners who are taking it easily, in the sense they are happy to find a niche, try to get an excess return out of that niche, and they accept that filling their portfolio will take a little bit longer. We have other partner who wants to place the money on the fly, and then they are very happy to buy either a big portion of a portfolio of someone else, or just enter with very low prices, and then they can manage to fill the portfolio. It depends a little bit on your strategy and also on your time horizon to invest.
And maybe if I may add, because I thought about it, we think of it as a deal-by-deal basis, because the funds are our clients, our investors. And we wanted to separate it from the rest, to not having any conflicts of interest. It's a bit the same when someone asks, why isn't Apple creating a bank? I mean, in theory, Apple has a lot of data. They could just become a bank as well. But they themselves, banks are their clients, so they would lose market share, right?
Thank you very much. So luckily, I've been robbed by my last question. It was very similar to yours, but we don't have a lot of time left. I think we can maybe squeeze in one last question, and then we still have time to approach the gentleman afterwards. Otherwise, we still have some presents downstairs. Yes, very last one. I can give you this one.
Thank you. So we heard the clients are not the smartest guys when I hear your return. So What are your strategies to get them on your on board?
I hope you didn't derive the statement from from my comments. Clients are the smartest, I would say, in the game, and especially in the era of digitalization, clients are king because. In the 90s or beginning of 2000, you had to go to different branches of a bank to get the best price. Nowadays, you can go in many websites. You can get the best price possible. So for us as a platform, first of all, we consider clients both the investors and the borrowers, and there's no platform if you have an overshooting supply or an overshooting demand. So we have to look with the pricing that we're performing and with our fees, of course, that we get always into balance. But I think clients are now the king, or are even more than in the past the king, because they get so much information from the internet that you cannot go around and pick the price you would like to get.
I would say that's the ultimate goal of every marketplace lending platform to just come up with a fair price. Just the fair price.
I actually think they are very smart because they use the platform. They have not.
Yes. Okay.
They have not accepted, this spread, this huge spread, and that's what makes the advantage of using a platform. Yeah.
And something that we are working on in the association, so the Marketplace Lending Association, is not. We know that the clients are smart, but maybe they're just not aware of this marketplace lending segment. And what we do, well, we're here today. This is one thing we do, and this is one of the main goals of the association, just to make investors and also borrowers on the other side aware about the possibilities they have and the opportunities they get from the platforms. All right, I think I need to close here the speech, but we still remain here a couple of minutes. If you have some more questions, please free to come.
Thank you. Thank you.
Finally, the mandatory risk warning. The content of this episode is for general information only and is not a recommendation to buy or sell any financial products. All information is supplied without guarantee, and this is not an investment advisory.